Palladium overtook gold this month to become the most valuable precious metal for the first time since 2002. This after a challenging year for gold, which has seen declines of more than 8% since the January peak. With me now to discuss the outlook for gold and precious metals in 2019 is Mark O'Byrne, Research Director at Goldcore. Mark, thanks so much for joining us. What are your thoughts firstly on palladium overtaking gold?
Hi Victoria, thanks for having me on again. It's interesting, as you said, last time it happened was 2002, so it hasn't been seen in 16 years, and I think fairly soon after that, palladium surpassing gold back then, gold played catch up in the following years. So I think palladium has had a big move up in a short period of time. We're probably due a correction in the short term. Supply demand, it's quite different than gold. It is more of a commodity that's dependent on industrial demand. But why it's interesting, I think, is 40% of supply actually comes out of Russia. So if you have this geopolitical tension with Russia and you see resource nationalism, then that could impact the supply side of things, which means that the price could actually go higher in the medium and long term. But I think, our view would be that over the medium long term, gold would tend to outperform because we do think that safe haven demand for gold is quite sustainable and will come back into the marketplace given Brexit, Trump and the various risks that we see out there today.
So let's just have a quick look at the chart of gold because it's been having a pretty challenging time, you can see here. What have you made of the price action this year? Are you surprised by the declines?
Small bit, yeah. I mean, we thought, given the various risks that are in the world, that gold should have performed slightly better than it did. But I suppose it tends to have an inverse correlation with stocks and with risk assets. And stocks had a fairly good start to the year, and therefore, understandably enough, gold underperformed. More recently, obviously, a bit of volatility has come into the marketplace, and we've seen a lot of stock indices internationally now are down 20%. They're in bear markets, and gold has begun to act as a hedge again. So, as you said, it hasn't done great in dollar terms, but you have to remember the dollar is one of the strongest currencies, or it is the strongest currency in the world in recent months, and it has done very well indeed. I think that surprised most analysts as well. So gold has actually done well in euro terms and sterling terms, and I think that's an important thing to consider because, obviously if you're a UK investor or indeed a European investor, you need to think about gold in local currency terms and not solely in dollar terms.
So what's your outlook for gold in 2019? What are some of the key drivers that we should be watching out for?
So yeah, we think it should do. I mean, there's so many variables and so many potential market events out there, and it's very difficult to be definitive. And we try not to sort of put our finger there and give price predictions. So all the usual caveats in terms of past performance, no guarantee of future returns, etc. But we do think, given the Brexit risk, the Trump risk, the trade wars, and just the fact that economic growth seems to be slowing down, particularly in China, you see it in the recent data, but also in the US and indeed in the European Union in recent days, a lot of the data has been to the downside. So with fragile economic growth, we think that should support gold. It could impact stock markets. So we think gold should well do 20%, 25% return in 2019. On the high side, we think we could go as high in dollar terms up to $1,600 per ounce. And our year-end prediction for what that's worth, we don't have a crystal ball, but we do take part in the Bloomberg Gold Survey and the Reuters Precious Metals Poll. We're basically calling for $1,500 per ounce by year-end 2019.
So a lot of the drivers that you mentioned there were more on the demand side. What about the supply side?
Well, supply side is quite restrained, and just today, Bloomberg reported on South Africa. Production has absolutely collapsed. It's been collapsing for many years now. It's collapsed again in recent months. So it's a very interesting phenomenon. We're seeing not peak gold per se, but I think plateau gold. So gold mining supply around the world has not increased. Only in China has it increased. Most markets around the world it's actually fallen, and that's seen in Australia, Canada, and particularly South Africa. Your viewers will be interested to know that gold production in South Africa was over 1,000 metric tons in 1970, and last year I think we were, and this year it looks like we're going to be closer to about 150 to 200 metric tons. So it's collapsed 80% in South Africa, the biggest producer in the world. So on that supply side, it is very much constrained, and that means you're dependent on supply coming in from liquidations from the ETFs in particular, and from scrap gold. And there hasn't been, the ETF demand has been, it's been a sort of mixed bag. It was strong earlier in the year, quite weak in the summer months, and it's picked up again recently. So yeah, supply is fairly constrained. So all it takes is a little bit of increase in demand on the ETF side, and also in terms of coin and bar demand, which has been quite robust, particularly in China and India, and that should be very supportive of gold.
So we know in terms of the equity market that we're in a late cycle phase. We're coming towards a potential recession. Lots of economists saying we could have a recession as soon as 2020, possibly a market crash at some point as well. Is gold a safe haven still? Is it the place to be?
It is, yeah. I mean, there's a huge amount of research from both academia, independent asset allocation experts, the pension industry, showing that gold has this a lack of correlation with risk assets, or indeed an inverse correlation with risk assets. But oftentimes people expect to see this on an hour-to-hour basis or a day-to-day basis. You know, gold is actually correlated with risk assets in the very short term, and frequently we see that when stock markets, the S&P 500 is down sharply, global stock indices is down, gold can actually come off as well, because the people tend to liquidate everything en masse, you know, particularly the traders, hedge funds, a lot of your clients, and go to the safety of cash or treasuries. But over the medium and long term, gold has this inverse or negative correlation with risk assets. So over a quarterly and annual basis, you tend to see gold tends to go higher when stocks go lower. And given the risks of a recession, we think there's quite a good chance of a recession in 2019 in the US, in the EU, and indeed globally. So therefore, we do believe that we will see that inverse correlation again, and gold will be. Most investors around the world haven't needed a safe haven asset in recent years because stock markets and bond markets have performed so well. We believe when they do need a safe haven asset, when these markets correct quite severely and potentially crash, that's when gold will come into its own as a safe haven asset again.
All right, now let's have a quick check on the silver chart as well, because we can see that it's been having a rather tough time this year, particularly between February and sort of August, September. It's kind of been trading within a relatively narrow range since then. What's your outlook for silver going into next year?
Yeah, it's had a hard time, and I mean, it looks fundamentally undervalued, both versus gold. The gold-silver ratio is something we keep an eye on, obviously, on a daily basis, and the ratio is something like, I think it's 85 to 1 the last time I looked, you know, so gold's at $12.50 dollar terms, and silver $14.50, so it's above 80 to 1, and anytime the gold-silver ratio is above 80 to 1, it's a good time to I suppose, go overweight silver vis-a-vis gold, and some of our clients would actually, sometimes they trade and they would move from gold into silver when silver is undervalued like this. And it's not just undervalued versus gold, obviously, because gold looks quite undervalued vis-a-vis stocks and bonds. So silver looks one of the most undervalued assets in the world. But it's performed terribly, and therefore it's cheap. It's cheap relative to other assets, and we think it will outperform both gold and other assets in the coming months and years. You know, I mean, there's some analysts looking at it and saying, look, it looks like the levels that we were seeing back in 2001, 2002, when silver was trading at less than $5 per ounce. You know, so there is an interesting opportunity there. Quite volatile though, and that's the one thing. It's not really for people who are risk averse. It is quite a volatile beast compared to gold, and so you just need to have your wits about you. And for your clients, I think you need to be very careful in terms of stop loss orders and just managing that risk.
Mark, thanks so much for your time.
Pleasure, Victoria. Good talking to you.
That was Mark O'Byrne, Research Director at Goldcore. I'm Victoria Scholar, and we'll see you very soon.